Good afternoon, everybody. It's a great privilege being here today. Thank you so much for that wonderful introduction. Only half of it is true, as usual. I'm also going to speak a little bit slower than Alan did, and also Mick. So as you mentioned correctly, I'm a Swiss guy, so I tend to be a little bit slower. But however, I'll try to use the next maybe 25 minutes to give you a little bit a better understanding and view what's actually happening in the world of impact investing. I'm not going to talk about philanthropy, but I much more would like to talk a little bit about the alignment of financial investments and social impact. That's what microfinance is about. And it's quite a complex topic. So first of all, maybe I would like to just spend 2 words on who is Blue Orchard? What is Blue Orchard's mission? This company was founded 15 years ago by the initiative of former General Secretary Kofi Annan in Geneva. And it was meant to address the so-called Millennium Goals. You probably have heard of the Millennium Goals formed 15 years ago. One of the Millennium Goals was to eradicate poverty. Decreases by 50% to the year of 2015, this year, and eradicate poverty in the next decade. So Blue Orchard's mission always has been to help to eradicate poverty, first. Second is to help to create financial inclusion markets, so provide access to financial markets to poor people. And thirdly, also to stabilize geopolitical perspectives in certain countries to, for example, also decrease migration, a topic which obviously is of utmost importance these days. So these 3 topics are the mission of Blue Orchard. We have been here for 15 years, and I want to talk a little bit how we are trying to achieve these goals and where we stand today. The current president of the World Bank, Mr. Kim, he quoted, I think it was in April of this year, that today a little bit over 1 billion of people on our planet are living with less than $1.25 a day. There is a definition of extreme poverty and relative poverty. Extreme poverty being defined as an individual having less than $1.25 a day. Relative poverty is anything between $1.25 to $4 a day. So we always need to talk, if we talk about poverty, it's always a matter of definition. Is it extreme poverty or is it relative poverty? Fact is, it's a little bit over 1 billion, but also fact is, 20 years ago, to get the figures correctly, the world population was 5.2 billion. And at that time, roughly 36% of world population was living in extreme poverty. 36%, basically 2 billion individuals. Today, in the year of 2015, the world population obviously has grown dramatically, 7.3 billion, and the percentage of extreme poverty has decreased to 12%. So the overall Millennium Goal set by Kofi Annan, and this is the good news I would like to also make today, has been pretty successful. Of course, poverty has not and will never be eradicated, but what has been achieved over the last basically 2 decades is significant. Part of that due to investing in microfinance, part of that obviously due to economical development. China has provided very strong impact on these figures as well. It's a combination of various factors. Now, you look at the world today, so we are talking today roughly 1.2 billion individuals living in extreme poverty. You need to look at the red and the yellow color here. Anything here is a percentage above 40%. And you probably would not be really astonished to see these colors here. And all the colors which are yellow or red are unfortunately the markets we are active in, and we try to fight poverty together with many other institutions and together with the World Bank. Besides poverty, coming back to Mick's comment, is who actually has access for financial perspectives into these markets. And you see here the red colors, only 16% of all inhabitants in this country actually have access to financial services, and the yellow countries, it's anything up to maximum of 50% who have access, and 50% are lacking access. And Mick made a very nice example a couple of minutes ago, showing that without having access to a financial possibility and to banking services, you cannot develop economically. It's impossible, because it's all a matter of having credits and being able to fund and invest as well. Now, if you are born, Mick, you joined us to Arequipa, for example, in Lima. So if you are born somewhere in Arequipa today, you happen to be born there, and you have the perspective to move economically, or to, in order to increase your ability to live with your family. First of all, you need money. So you are born in a poor environment. You've got an option to ask your friends and families to lend any money to invest, to buy a car or buy an oven or whatever. Usually the family is unable to provide any funding. The next option is you go to a bank, as Mick mentioned, but there are banks. That's a frustrating thing about it. There are a lot of banks in these countries, local branches, but they will never ever lend you any money without any collateral. And that's the key word. It's having collateral, yes or no. No collateral, no pledge, no money. You have a third option. You can go and ask for consumer credit. In all these countries, you would find a very large number of so-called shark lenders. If you ask for consumer credit, you will get that money more or less instantly. You don't need to pledge anything. You also don't have a collateral, but you sign off with your name and with the name of your family. The default rate with the shark lenders in these countries is about 90%. Whenever you default with a shark lender, you and your family will never ever have the opportunity to receive a loan by any credit facility in such country. So by taking a loan with a credit lender, with a shark lender, and not repaying, that's economically a total disaster for 1 or 2 generations. This fourth option you have is to approach so-called microfinance institutions, which any of you who have traveled in frontier markets would have seen that there are a lot of branches or outlets of microfinance institutions where you actually can ask for a loan without having any collateral. And this is the fascinating story about microfinance. Microfinance is built upon trust, it's built upon pride, and it's built upon dignity. You do not need to have any collateral. The question is, how can that work out, and how can you basically manage multiple of credits and ensuring a certain level of payback ratio in order, to assure that you can actually pay back the lenders of the credit. So I would like to show you 1 or 2 examples. Before, I would like to show you a little bit how the system is actually functioning. This is an accurate example. It's from Colombia. It's a lady I've met in person. It's an example on pineapples. So the price per pineapple, the sale price in Colombia, is currently roughly 2,000 Colombian pesos. The purchasing price per pineapple is 1,600 pesos today, so it's very easy math here. So a margin per pineapple is roughly 25%. In order to basically have the ability to go and purchase the pineapple, you need to have a credit. And in this very simple example, it shows you that if this very lady is able to sell 5 pineapples a month, she has the capability to pay back the loan and the credit. Because very often the question is we hear is, how can it be that, you provide credit, there's an interest rate to it, so there's a commercial business. How can you assure that actually the interest rate is being paid back and there is amortization of the loan? We are doing this at Blue Orchard since 15 years now. Today we've got roughly about 22 million loans outstanding, individual loans. Our default rate is 0.4%. the default rate is lower, probably the lowest in any credit facility you can imagine. It's lower than providing any credits to businessmen in Switzerland. Default rate is close to zero. It's unbelievable. And there are a couple of reasons for that. Obviously, you need to have some processes in place. Again, it's a matter of trust and pride. It's very important to understand that if you are an individual and you are provided a credit, that you will immediately talk about that. Everybody would know that. And it's your utmost goal to ensure the payback of the credit because you want to grow over time and you want to ask for more credit over time. Very important. There's a social component to that as well, which is very important. But what is very important to understand is if you start, it took me quite a while to understand that. If you start at zero to build up a business, it does not take that much in order to really be able to make some profits. If you buy an oven in Kazakhstan or a cow in Kyrgyzstan, for example, it's a difference if you sell 2 liters milk per day or you sell 0 liter milk per day. The moment you start to become productive and you have a service or you are producing any goods, you will be able to make profits. Now, none of our clients most likely will become a Bill Gates or will become super rich, but that is not the intention. The intention is to lift individuals away from extreme poverty into an environment where they have the ability to prosperous develop themselves and develop their families. We heard that, education, it's about school, it's about medication, it's about nutrition. That's, of course, all topics we are measuring. Maybe here a very small comment, how do you measure that? I could talk hours about that. But it has been always a big debate, how do you really measure the social impact in microfinance? Yes, you can measure number of people going to work, kids going to school, the degrees of the kids, etc. But it has always been very difficult because you could fake, the numbers and everything, and nobody really knew, what was the real social impact. And the easiest way really to measure it is as we heard early on, is to measure infants' weight and size. All of you who have children, you probably have been seeing with your pediatrician, I think in Germany it's called percentile line, where you've got, the normal average of your kids in development. And in the underdevelopment countries, you cannot use these percentile lines because they are shocking if you compare it. So by really providing credits to family and then continuously weighing and measuring the development of infants up to 2 years, you will have a very good indication on how the social impact actually works, and you cannot lie. So that's the sunny side, that's the emotional side. Now I would like to share some views with you, how you actually implement it and how it works, because it's hard work behind that. So first of all, who are the clients? The clients are roughly 80% are females. We also heard that. That has been a study done by ourselves. It's totally fascinating to see how the dispersion between men and female actually alter due to regional aspects, but also due to age aspects. We know exactly if we can borrow a 45-year-old male in Kenya money, or if we can borrow a 45-year-old female in Kenya money, for example. Research is absolutely important. Now, why is this? There are several reasons. There are some obvious reasons. It's drugs, alcohol, sex, gambling, etc. For example, in Africa, I like this example. If you've got a male and a female, take again Kenya as an example because that's accurate. If you give the money to the male, he has exactly the same ambition to increase the lifespan of the family and to help and to fight poverty. But the fact is he's got a different risk awareness. So what usually happens in these countries, you talk about that, you are eligible to get a loan, you receive $1,000 loan, you start to talk about that. So what would happen immediately, a neighbor would come along and he would tell you, I'm going to double that money by tomorrow. You give me your $1,000, I double it by tomorrow. The female reacts 93% of the time negatively to such a request. the male reacts about 60% negatively. So 40% of the time he actually agrees to the deal. He has a clear ambition to really help the family, but he's got a different risk awareness. It's totally interesting. You know, he's a gambler, and he really believes by basically having the ability to double the money, he would prefer to take the risk. The women with 5, 6 kids on the floor, she knows exactly she will never ever take any risk not to be able to help their family. So, and you've got this research throughout the world, and this is a little bit a feedback, you know, from where basically how you can act and how you handle these activities. So you need to know exactly whom you give a loan, and you need to understand the conditions of such a loan. Now, how does such a setup function? This is a bit complicated, and I'll keep it very short. But I think it's important because it's a value chain, and it goes globally for all microfinance or impact investing activities which are commercially driven. On the left side, you've got the investors, so you've got the donors. Donors being either foundations, being pension funds, private individuals. I all call these private investors. On the other side, you've got the public investors. Public investors being the World Bank, the UN, the treasurers of this world, all the sovereign funds. We've got, for example, a fund in Latin America by the US Treasury. It's called the Obama Fund. This is a typical fund for Latin America handled by the US Treasury. So you've got twofold of investors. And on the other side, on the very right side, you've got the borrowers who are receiving the money. The borrowers are either individual borrowers or they are group borrowers. Group borrowers are somewhat interesting because you can really handle the default rate much better. And a group lending indicates if you go into a village, instead of just, you know, going to see Peter and myself and give me $1,000, I much rather go and see all the 10 neighbors, and I assure that I can basically provide loans to all the neighbors. Why is that important? Because if I tend to start to rather drink than to invest my money, my neighbors would assure that I would stop drinking, and if I would still not stop drinking, they would step in my position and they will pay my interest rate, because they know if the interest rate is not paid back, that's the end of the system. One thing what is totally important, despite having, you know, over 20 million credits, you need to enforce all the contracts. Of course, by the nature of definition, that's important. Despite, you know, having the ability to forego some investments, you need to officially enforce them in order that the system does not collapse. So a borrower always needs to have the feeling that he's eligible to pay back. He has to pay back. He can always discuss and argue if he needs more time. Let's assume he's working in the agricultural field and there was this flooding. Of course, you would then talk and communicate and you would agree on very different terms. But factually is that you always will need to pay back at the end in order to keep the system alive. So what you have here in the middle, you've got somebody like Blue Orchard here on the left side, and in the middle you've got so-called, these are these blue houses, you've got microfinance institutions. There are globally about 3,000 microfinance institutions which receive money from players like Blue Orchard, and Blue Orchard is the leading company in that field. So most of these banks have been seeded by us, and we act a little bit like a central bank. So I'll give you an example. If I can give you a recent example, what it was in the papers. You have got the whole migration topic in Egypt, for example, currently. Middle Eastern countries, Bahrain, Qatar, and Abu Dhabi have put aside roughly $6 billion in order to stabilize Egypt. These countries have got a huge fear. If Egypt is not going to be stabilized, the Middle Eastern countries will be flooded by migrants and by political unrest. So what are these countries doing? They would be consulting with the World Bank, for example, and the World Bank would give advice today, instead of giving pure development aid, you should form funds for microfinance, credit funds, and you need to assure that the money is deployed to the local people who suffer most in order to keep the community stable and in order to reduce any potential migration. And that has been happening now for the last 2 years. It's a process the world is currently in and all these large players. So today much more aid is actually invested into impact investing by really trying to help locally and provide resources in order to finance local businesses instead of just providing development aid or pure philanthropy. And that is, if you listen to Ban Ki-moon, etc., and 2 days ago in Paris, there was this big climate change conference. It's all the money today of the large sovereign funds are basically directed into these kind of credit investments. So it's very interesting. I think we've got the proof of the last 15 years that it's really working. Now, the fascinating thing about it, it's not only social impact, but it's also economical performance, because that's also something which is a little bit strange in doing microfinance, because at the end of the day, there is also a return for the investor, but that's precisely the idea behind it. It's an alignment of interest. Now, how does that work? The blue line here is the index on microfinance with a track record of, well, here we've got a 10 years track record. You don't need to go in detail. What I want to show here is microfinance is a very, very boring business because it's totally diversified. You've got hundreds of thousands of micro loans. The average in our case is $1,200 currently. That's the average size of a loan. And since it's so diversified and globally diversified, and since you have got basically no fallout rates, no defaults, the returns are absolutely stable. This is the blue line. It's never ever going to look like an equity investment, but on both sides. So it's a very, very boring investment. But in the current yield environment, annualized return rate of 3.85% is, and this is net of fees, is substantial investment. And now I want to show you that because this asset class has gotten of much larger importance over the last couple of years due to the current interest rate environment. It has become attractive for an investment. You've got pension funds, individual investors, knowing that there's no volatility, no correlation, and you still make your 4 to 5%. This is the index, so the products actually make 4 to 5%. You have got a very stable investment. And we are seeing quite a substantial flow of assets moving into this sector now. It's the fastest growing asset class globally. The growth rate is 40% currently. It's a small asset class, keep in mind. We're talking overall about 60 billion assets, which is an unbelievable figure, but in the finance world, this is nothing. It's really nothing, but it's growing tremendously. So this is good news because there's more help. On the other side, we need to be careful that the markets are not over-flooded with money and basically destroying the actual cause of what is happening here. On the social side, the key question always is there a correlation between the returns and the social impact? This is a study we did so this is about $5 billion US. You see here, every dot is, I think, an allocation, an average about $5 million. And you see here that the social performance score, which is an indication of the impact socially, has no correlation with the profitability or the performance. And this is totally interesting, and we never really knew up to about 2 or 3 years because there was no evidence and there was no quantitative analysis. But we were able to prove that there's really no correlation on the social performance. And this is also, stated by Goldman Sachs, by the UBS studies, I'm sure also by your house, by your studies today, that the SRI investment, so the social responsible investment, these days, they are just as good as any other investment as well. And that is very important. That also goes for activities in microfinance. So what we are doing today, we are basically active in 60 countries. And that's basically also reflecting a little bit these countries I showed you early on. How we do the work. We have got teams on the ground. Obviously, you know, Switzerland is the hub of the company, but we only have got a handful of people working in Switzerland. Bulk of the employees are locally working in the field. I'm personally spending maybe about 50–60% of my time in the field. This suit also probably will keep for 30 years, as we heard earlier on today. I usually also don't wear suits. We travel in buses, on bikes. We really try to be very close and understand what's going on. That's the only way doing that credible and really understanding what we're doing. And as mentioned early on, all the people working again for such a company, similar to what we heard today, they are totally inspired on what they're doing. It's an intrinsic motivation. Nobody works in these companies for money, but as soon as you have the ability to really see how you can actually impact a single life, you know, the money becomes a much different component in your value chain, your personal value chain. And that's also the reason why, you know, you get a lot of interest, why this industry is growing. So I think what we are going to see in the future here is much more development in that respect. You will see much more big banks talking about that. You as an individual, as a client of a bank, will be approached much more often with a potential product, because the performance speaks for itself and there's a social impact to it. And that's also the reason why Wild Hearts and Blue Orchard have decided to team up, because Wild Hearts has got a fantastic organization. It's also alignment, entrepreneurial and social. That's the same for what we are doing and what our goal is. And I think we've got very, very strong cards in our hand to really play that. We need to talk about that. We need to build awareness. And we need to have people like you, an audience who is interested to see what's going on. With these comments, I would like to close here. I mean, as I could talk here for hours and hours, but I want to avoid that. But I can just tell you it's a pleasure that, you know, that you are the audience and you're listening to that. And I can only ask, if you ever see articles in magazine or you get a chance to YouTube some of the stuff, the documentaries, you know, try to dig in, do a deep dive and see how the industry is really working and see how powerful $1,000 can be and what you can really do for an impact to individual lives. As you and me, we were just lucky to be born somewhere here. There are many other people who are not that lucky. Thank you very much.